What is up, guys? Thank you so much for checking out another one of my videos. Make sure you like this video, you subscribe, and you hit that notification bell so you know when I post new videos. So I found this article here that kind of summarizes a lot of the crazy statistics that are going on right now due to this pandemic, and I thought it'd be interesting to share with you guys. Now, you guys know I have never been a gold and silver pumper, never. I've always preached to be a conservative stacker. I've even said you don't have to check the spot price of silver. You don't have to check the gold and silver market every day. You don't have to go through trends in order to start buying gold and silver. It's very easy, very laid back, and that was one of the most attractive things about gold and silver, at least to me, when I first started. And I've also never said that silver is going to hit $100 an ounce. I've never preached that gold is going to hit $5,000 an ounce. I've never done that. I've been very conservative with my predictions as well. Now, because of everything that's going on, if you take a step back and really just analyze everything that is happening in the world right now, you got to really start believing in gold and silver. I've become more bullish on gold and silver more than I've ever been in light of everything that's going on. There's so much fear in the markets. There's fear in the world, so much so that countries are essentially locking down their economies, just having it screech to a grinding halt. And we have 6 million Americans applying for unemployment, and I'm guaranteeing that number is going to grow. Some of them, so that's already a problem, but then some of them are actually making more money on unemployment than they are working, and that's going to be a whole nother problem. Then we got these stimulus packages, and guaranteed down the road, we're also going to have bailout packages. So if you look at all that, you take a step back, and you really just look at all the markets at the moment, the only thing that makes sense is gold and silver right now. So we finally have the dealers that are finally catching up to the physical demand with their supply. I see a lot of the dealers posting on Instagram that they got these massive orders of physical stuff finally in stock. But how long is that going to last, considering just the title of this article? Gold and silver mines closed as physical silver becomes most undervalued asset. Not only are the silver mines closed, but we also have the mints that are closed. So this is a band-aid on the supply and demand problem that we have with the physical bullion. On top of that, the stock market has been relentlessly unpredictable. Last 2-3 weeks, gold and silver have been unpredictable. It finally started to level out just maybe this week. It started to level out. And who knows what's going to happen from here. But like I said, you take a step back, you pay attention to everything that's going on, and honestly, for the first time since I've had this channel, you have to look at gold and silver as the answer. You just have to. So anyways, this is the article. I'm going to throw in my 2 cents where possible. Like I said, it's a very good article, and it just really makes you think about how crazy everything is right now. It just really puts it into perspective. So this was written by Mike Gleason of Money Metals Exchange. It is titled Gold and Silver Mines Close as Physical Silver Becomes Most Undervalued. This is on fxstreet.com. A surge in coronavirus cases, an expansion of economic lockdowns, and an explosion of unemployment claims hit markets this week. But this deluge of bad news didn't seem to catch investors by surprise. Instead of crashing to new lows, the stock market held within the trading range and rallied yesterday, following the release of a horrific jobs report. Now, with the stock market, they keep saying that it recovers, but then the next day it crashes, then the next day it recovers. Whenever there's a hard dip, there's going to be a hard incline. And the way I look at it is it's basically going on the offensive. Instead of just sitting back and not taking advantage of the volatility, I've pretty much been playing with the market as well. And it's been crazy. It really has been relentlessly unpredictable. So as you just read, it rallied yesterday. So I guarantee you come Monday, it's going to go right back down. That has been the trend. These hard dips and hard inclines, and people are making a lot of money. If you can day trade, it's a huge advantage. You can make some good money in that volatility. The problem is, when is that hard incline going to be a permanent one? That is the problem. It's been a huge week for commodity markets as oil prices posted their biggest single-day percentage gain ever Thursday, popping more than 25%. Oil prices lifted from their severely depressed $20 per barrel level after President Donald Trump met with oil executives and announced Russia and Saudi Arabia would agree to curtail production. Turning to precious metals, volatility finally tampered down a bit after 3 straight weeks of some of the wildest moves we've ever seen in both the spot market and the bullion market. You guys have experienced it. It's been crazy these last couple weeks. Just to find silver was a mission. And I think that is going to happen again. We're going to have a little break right now. Like I said, these dealers are posting on Instagram. They got all these orders in. But I guarantee it's going to start happening all over again. With so many disruptions and dislocations now hitting the economy, investors have to ask themselves, what is truly sustainable? That is everybody's question. We have all these analysts. I read so many articles about finances and predictions and all this stuff. Nobody knows what is going on. The markets have been outrageously unpredictable, and these analysts can analyze it all they want. The fact is, we're going into a recession, and the one thing that I've read that has been constant is that by the end of this month, we're really going to feel that recession. And my personal prediction is that this is going to be a very deep recession. But unlike in 2008, I think this is going to be a quickly recovered recession. I think it's going to be very, very deep, deeper than the one in 2008, but the turnaround is going to be a lot faster. A great many businesses won't be around after this global pandemic finally recedes. Entire industries will never be the same, and so many families will be financially wiped out. Government stimulus may well prevent politically favored companies from going under, but at the cost of putting federal spending and borrowing on an even more unsustainably steep trajectory. While there's no limit to how much currency the Federal Reserve can create to prop up the government and the entire financial system, there are limits to the US dollar's credibility as a store of value, and they are likely to be tested as the currency supply accelerates upward. So we got one stimulus coming, and they're already talking about possibly more stimulus coming. And like I said, I really think on top of all this stimulus that we're getting, there's going to be some massive bailouts for industries in general coming as well. So, yeah. At the same time, production of scarce assets such as precious metals and an array of commodities is likely to fall off a cliff. The current supply and demand dynamic is most raw materials is both unprecedented and unsustainable. The big story we have been told with regard to crude oil is pandemic-driven demand destruction. The global oil market is seeing demand contract by up to 25 million barrels per day as economies remain virtually shut down. To make matters worse for oil producers, Russia and Saudi Arabia have been flooding the world with more output. They drove crude oil prices down so low that the entire North American shale industry, which was already reeling, now faces the prospect of being driven out of business. In the first quarter of 2020, oil prices suffered a 66% crash, a record drop for a single quarter, settling right around $20 per barrel. At that price, nearly the entire energy sector is unsustainable. From the frackers to the deep sea drillers to even the more conservatively positioned diversified energy giants, $20 oil simply doesn't work. Until oil prices get back above $40, the only way some of these companies can hope to survive is by drastically shrinking their operations. Wells are being capped. Industry analysis anticipate a 70% drop in the U.S. drilling over the coming months. At the same time, demand is also expected to recover from the current levels. Although energy use will increase gradually at first as sections of the economy reopen, demand can increase a lot faster than supply. especially when the demand is being accelerated by $6 trillion in federal stimulus so far, and likely even more ahead. So that's what I was saying. They're already talking about more stimulus. Similar supply and demand pressures face the base metals and precious metals mining industries. Multiple mines around the world, from South Africa, which is one of the biggest ones, to South America, are currently shuttered due to the coronavirus. Even before the pandemic, the mining industry was in distress due to low market prices for metals. First Majestic CEO Keith Neumeyer had determined it made more business sense for the company to hold on to its silver assets rather than sell them into the market at extremely depressed prices. That's crazy. This year could see a record decline in mining supply for silver and other metals. And while the crude oil market entered the year with the supply glut that has only continued to grow, silver and palladium in particular were headed for supply deficits. Although industrial demand is currently way down, when it does recover, it will be difficult to see how those deficits don't widen and perhaps lead to price spikes. Analyst and MoneyMetals.com contributor Steve St. Angelo expects investors will continue to seek precious metals for financial security during this pandemic and its aftermath. But there may simply not be enough gold and silver above ground to go around, not at the current prices anyway. And here are some of Steve St. Angelo's thoughts from the video presentation he posted earlier this week. Steve St. Angelo, as a lot of large cities in the U.S. and around the world and countries are on lockdown, and they're going to continue to be locked down, I believe the U.S. now, according to Trump, is on lockdown till the end of April. That's another month. This is really going to damage the system, and so we're going to get into a financial storm in the next several months. So I believe the precious metals, you're going to see a lot more investors move into the precious metals, and there just won't be the supply. We've already gone through that, and I don't even think that many people have really got into gold and silver. I think it just kind of happened all at once. So imagine we get all these other people coming in. It's going to be hard to get your hands on any gold and silver. And that's why you should have been stacking before this happens. That is the purpose of stacking, is to be prepared. I believe we're going to see serious trouble with the bond market in the next month or so. And that's going to cause trouble with the actual bank accounts, the actual money market accounts, all the money, the digits that are held in the commercial banks, and then as well as the fiat money, the currency in circulation. So right now, the total gold value, and this is in identifiable above ground investment stocks, central banks, and private, is valued about $4 trillion. Compare that to the base money supply, which is about $28 trillion. That's 7 times more than all the gold. Now get silver. Total silver value is only $40 billion. It's 100 of the gold. Again, to me, I believe the most undervalued asset is silver. And we'll start to see that in the future as more and more investors move into silver to protect wealth. Another thing that is a little more attractive to, at least in my eye, silver is affordable. Gold, to some people, especially if you are, you don't have a job or you lost your job, it's hard to get right into gold. Silver is a little bit more, you get more bang for your buck when it comes to silver, especially if you really believe it's undervalued. So I think a lot of people are going to be buying a lot of silver. And obviously, $200 gets you 10 ounces of silver, where $200 only gets you about 3.1 grams of gold. So there's the difference there. So as far as supply and demand, silver is definitely going to have some issues down the road, in my opinion. But anyways, guys, let me know what you think down in the comments. Thank you guys so much for watching and listening to my terrible reading. All right, so make sure you like it, make sure you subscribe, and let me know what you think down in the comments. And I will talk to you guys later.